This is PNC Roundtable.
Hello, this is Ric DeVore, Regional President for PNC Bank, and thank you for listening to PNC Roundtable. It's on this show that we tackle some of the region's tough issues with people who make a difference.
Now here's the PNC Roundtable.
Welcome into our PNC Roundtable. I'm Paul W. Smith, along with my co-host, PNC Regional President Ric DeVore. Always good to see you, Ric.
Good to see you, Paul.
I want to say, I don't know, did your wife pick out the shirt and tie?
Absolutely.
I think you look fabulous. Now, not a lot of men can wear pink. I do, proudly so. I wear pink, but that pink shirt, buttoned down, nice, with a pink tie, I think it looks very good, and it's perfect for the season.
I think it goes with my hair, is what I've been told. So,
goes with your hair.
Gray suit, gray hair. Yeah,
I see.
Nice compliment.
Interesting. Well, it looks good, and I salute you for this. And I salute you for always bringing around great guests for the program. Stuart G. Hoffman, Senior Vice President, Chief Economist, the PNC Financial Services Group. This is a guy who acts as principal spokesperson on all economic issues for PNC, recognized as the most accurate forecaster in the past by Business Week, the second most accurate economic and interest rate forecaster by USA Today. What do they know? Second best. Come on, well. USA Today. I would take Business Week any day in terms of business things that are being said about people. Look, you're one of the top forecasters from the Wall Street Journal as well. And you're just an all-around nice guy, and it's nice to have you back, Stu.
Thank you. I'm glad to be here. I'm in a blue shirt today, but I got pink underwear on, so don't worry about it.
You know, Stu, this really is filed under the TMI. That's too much information, even for me. And, you know, I'm an open book. Okay, boxers or briefs?
No comment.
Okay. All right. It's my job to do the follow-up question. I'm sorry. On to serious matters. Let's talk a little bit about the PNC survey, the first ever survey of small businesses in Michigan, Ric, that you've had Stu working on and your team working on. Tell us a bit about it.
Well, we're really excited about this because last year, if you remember, when we did the show, Stu was quoting small business around the country, and the question came up, did we or did we not survey Michigan? And we did not at that point. And afterwards, Sean Wilson, Stu, and I talked, and we decided to put it on the radar. And so here we are coming back, I think, is a demonstration that we listened to what people had to say. This is a very important state for PNC Bank, and so Stu took it upon himself to get this done. So we're pretty excited about it.
Yeah, Stu, what did you find in general?
Well, as Ric said, this is the first time we've done it. Let me just tell you quickly, the survey is something we've been doing twice a year for about the last 9 years. We're talking about surveying very small businesses. 3/4 of them have less than 50 employees. Just over half of them have less than $3 million in sales. So we think we're sort of getting to the grassroots of the American business community, sort of the Main Street businesses. Mm-hmm. And as Ric said, we've done a national survey, but we never broke it out for Michigan. So this time we did. What we found, and again, we'll track this over time, is, to be honest, the Michigan sentiment of small businesses is a little behind the national average. They do expect sales to go up. They expect, a majority of them expect sales to go up. They expect their profits to go up. About 60% of them expect to invest in their own business, but only 17% expect to add jobs. And we ask them what's going to do the rest of this year. 17% are going to add jobs. The national counterpart number was 28%. So the reality is that I would imagine this is probably better than it was 6 months ago.
I was just going to say,
we just don't have the numbers.
I'll bet you $1, and you may not be a betting man, but I'll bet you $1 that the next time you do this, it will be better. Because the environment here for small business specifically has gotten better and better and better after it was pretty horrible with some tax burdens that we had.
I wouldn't take that bet because I'd agree. Not that I'm not a betting man, but I'd take the same side as you. I can tell you the national numbers, and for many of the other states that we have been doing, are much better now in the spring than they were 6 months ago or 12 months ago. So, I expect that trend to continue, and particularly in the state of Michigan.
So both of you, do you think, Stu Hoffman, and do you think, Ric DeVore, that we're in an economy that's the U.S. economy overall first is in a self-sustaining expansion?
I do. I think we're close. We need more jobs. We need jobs locally here in Michigan and Detroit, but particularly across the country. We had a pretty good gain in jobs in the first quarter, just over 200,000 a month across the country. Then March, though, was a little below that. So I think we're very close. We maybe are on the threshold of that. I think, though, we need to be able to show that small businesses and large businesses can keep up that pace, create at least 200,000 new jobs across the country for not just the first 3 or 4 months, but for the rest of this year. I think that'll happen, but, I think we need to see that before we can conclude that we're in a self-sustaining, what you might call a virtuous cycle economic situation.
And Rick, certainly that's what we're pulling for, hoping for, and somewhat sensing here in Michigan.
Oh, I think that's accurate, and lending has followed and gone up in the small business arena. And one thing I'd want to point out is in our town, and there seems to be some people that think that small business administration lending equates to small business lending. Rather, SBA lending is a component of small business lending. And I think sometimes people feel that's the totality of small business lending, and that's inaccurate. So we've seen an uptick in Michigan in a big way in small business lending. But as we've talked about before, Paul, you and I, and we talked about this, Stu and I as well, there's also an efficiency factor here. I think a lot of companies are growing revenue without adding jobs because they're just getting more efficient, and I think technology is part of that as well.
Through a lot of pain, we've become much more efficient in the auto sector. What is PNC's outlook for auto sales and production in 2012 and 2013, Stu?
We actually think it will continue to rise. There's actually very good production plans for this second quarter, at least as Wards can calculate it. So our view is that auto sales this year will be about 14.5 million. They were at that rate in the first quarter. Some people say it was all the warm weather, and they use as an explanation of all the good news on the economy. It was all just warm weather. When the weather returns to normal, somehow the economy is going to be much weaker. I don't agree. So about 14.5 million auto sales for the rest of this year, matching about what it was in the first quarter. For next year, a little bit higher, not above 15 million. And, of course, production will go along with that. We also think that we're near a peak in gasoline prices. Last year they peaked right before Memorial Day at just over $4 a gallon. They're back up there again, as we know, national average, $4 a gallon. But there's some signs in the futures markets for oil and even gasoline that they've come down the last couple of weeks. And typically they do peak right before Memorial Day. Maybe we're a month early this time. So we've never been in the $5 a gallon gas, scare mongers. We got to $4 again. And we think probably over the next 6 months it'll go down. So that'll be good for overall auto sales and, of course, affects the kinds of cars people want to buy.
Well, gasoline prices go down. It's good for everybody and everything because a lot of money is diverted to the tank that could have been spent in other areas of the economy. But, Rick, I know you realize and would agree with me that if we're at 14.5 million, the OEMs and suppliers that are so important specifically to our area are going to do very, very well.
Absolutely, and I think the thing that many times gets lost in this issue of auto production is they're making money at those numbers. In the past, we could be up at maybe 16 million and still not making money.
Right.
And I think not only are the big three making money at those numbers, but so are the suppliers. And that really, I think, drives a lot of this region and is a real positive for us.
And it came at some pain because there were closures and layoffs and elimination of jobs and a whole bunch of things that sadly, as it turns out, had to happen. But in right-sizing these industries and hitting these figures, you're right. There'll be profitability. And then that's important because it keeps the jobs going. There will be growth. The question, I guess, is, and I didn't see everything that you guys carried in, Stuart Hoffman, Senior Vice President, Chief Economist, the PNC Financial Services Group, and, of course, our co-host, PNC Regional President Ric DeVore. I didn't see if either one of you brought your crystal ball with you, but if you did, or even if you didn't, who wants to take a shot at when the Fed will start raising interest rates again?
I'll take that shot. I actually have my crystal ball implanted in my brain, so
really?
I carry it with me everywhere you
Excellent.
go. It's a chip. And I might follow up on, and I'll answer that, but I'll follow up on a question you mentioned about gasoline. About every penny is $1 billion. So if gasoline goes down 50 cents a gallon or up, that's $50 billion more that consumers have to spend over a course of a year to fill up their cars. So a relief of 50 cents a gallon is $50 billion sort of back in the potential spending stream of something else.
In other areas.
Now, on to the Fed. The Federal Reserve Chairman Bernanke, I met with him a week before last. The Fed is committed to keeping interest rates very low. They say through the end of 2014. We think it maybe not quite that long, but for this year and next year, pretty much guaranteed that low interest rates, whether you like them or hate them, if you're a borrower, you like them. If you're an investor, you're not too happy about it. But these very low interest rates, whether it's CDs or Treasury or in some cases auto loan rates, we think these very low and mortgage rates are here for the rest of this year and next.
And what's that do on the local level, Rick, running a bank as you do on a local and regional level? What's that do to the regular day-to-day banking business that you have?
Well, I think you see it in the trucking space. For instance, and if you remember, a lot of firms, trucking firms, attempt, if they can, to pass on these increased fuel prices to our other customers, our manufacturing customers and our retail customers. So this gas issue has a huge multiplier effect. If they can do that surcharge, then it's just passing it over and could show up to the consumer in increased prices. So it's definitely a key issue for our client base beyond just it kind of comes in backdoor, if you will, to the consumer in many ways.
And what about the interest rates, too, being where they are now or moving?
Well, I think the issue that we see, especially in our wealth management issue, is where to put one's money. Obviously, this is not a good time. We've spoken before about to buy bonds, right? So, if you we've had Jim Dunnigan in here before and talking about the mix between equities and bonds. And it still seems to be equities would be the place to be. Now, I would offer to you that PNC stock is a pretty good value as well.
Is it?
We released our earnings this week.
Stu, can he tell me that?
No.
Yeah,
I can't second it. But no,
inside internet trading.
He can give you his personal opinion, and but given that we just released our earnings yesterday, none of us have anything that isn't publicly available.
That's good.
And I also can't sell stock today, so
I suspect that's good too.
But I think there is a confusion for where to put one's money right now. In on the longer term, and so it seems like equities would probably be a good place to be for.
Well, it sounds like you're very bullish on the equities. Is that the PNC official outlook for the stock market, say this year and next?
Yeah, the way we have it right now, and we've been in this, the big picture is 65% in equities, 35% of a portfolio in fixed income for traditional financial assets, not real estate or gold or whatever. Mm-hmm. So it's almost 2/3, 1/3. We've been that way for a while. So we haven't pulled back on our bond exposure because we think interest rates are pretty stable. That means bond prices are going to remain stable. So we're not sounding any alarms. Maybe a year or two from now might be a better time to get out of the bond market. So are we bullish on stocks? Well, we've had a hell of a run in now almost the first 3.5 months of the year. Markets don't go in straight lines. Of course, there'll be some correction. Had a little bit of it last week. But yes, we're positive on the stock market for this year and next year, although I'll admit as we get towards the end of this year and all the politics and who's going to win and who's not, and whether or not a lot of these very contractionary tax hikes are going to go into effect next year is now scheduled, could definitely give the stock and bond markets some jittery times in the final months of this year. So could be a little pullback, but our view on the economy is positive, and we view any big drops in the stock market, 5 or 10%, as buying opportunities, not a reason to get scared out at just the wrong time.
Well, and because it's the silly season and heading into all of that, and you start to say, well, we're going into the election, nothing will get done, but we'll certainly hear a lot more about the huge federal deficit. Will there be anything done? And if, in fact, there could be something done, if I made you king, Stu Hoffman, and you could just do one sweep of the arm and deal with this, what needs to be done to reduce the huge federal deficit?
Well, of course, I can give you my opinion, not necessarily representing PNC, but as an economist, I happen to like some of what came out of some of the Commission Simpson Bowles. It talked about restructuring taxes, but at the end of the day, it said you cut spending about $3, but you do raise tax revenues by 1. So I'm not in the camp, the Grover Norquist that says take a pledge never to raise a dollar of tax revenue. I just don't think you can do it all from the spending side. And likewise, you don't want to raise taxes and not cut back on spending. So I'd do it about 3 to 1, $3 in expenditure cuts. This is over the next 7 or 8 years, and an increase in taxes. And maybe you could get those two lines to cross, but right now the expenditure line is so far above the tax revenue line that we're left with a deficit this year, probably for the 4th year in a row, of $1.3 trillion. And that is a path of financial suicide for the U.S. to remain on for the next 4 or 5 or 6 years.
But convincing people of that fact has been difficult because it seems we've lived with this for such a long period of time. And is there an effect on the local end of business, Rick, for you?
Well, I think that this uncertainty, and we saw this last year, right? In June, we came to somewhat of a grinding halt as the confluence of the European debt crisis in Washington. So we do worry that, as this election gets sorted out and we get into the summer months, I do have worry that people are going to put off some decisions that they may be likely to make on the capital expenditure side. With that said, when you look through our companies, at least in our portfolio, you can see that people have not been spending for capital expenditures like they have, and eventually that catches up to you, right? This equipment will wear out eventually. So it's going to be interesting to see this summer if people take a pause and hesitate, or if they say, we have to replace that line, we have to replace that equipment, it's getting worn out, I got to do it anyway. It's going to be an interesting summer as the election heats up.
I'm happy to hear you say, Stuart Hoffman, that you look at any dips in the stock market, any corrections of 5 to 10% as buying opportunities and not for the time to run for the hills. There are some people saying that people should be out of the stock market by the end of April. I mean, there are people that will always do this, and one time or another they'll be right, like a stopped clock.
Yep.
But you don't feel that way at all.
No, there's the expression sell in May and go away, but don't forget, but be sure to remember to buy back in November. So, you're playing the games of, I want to get out of the market for 3 or 4 or 5 months. It's a timing issue. I could be sympathetic to that, how much the market has run up, and especially given that this November we have a key presidential election. But those people who try to time the market, get out for 2 or 3 months are not, the way we would advise PNC investors.
But when do you, as a stockholder, stock buyer, mutual fund, when do you take your profit?
You take your profit. We would say you take your profit if you think the economy is going to fundamentally make a turn for the worse, and therefore corporate profits, and it's not a 1 or 2 quarter event. If we thought the economy was going to fall into a recession this year, we wouldn't be positive on the market. If we thought the economy was going to roll over back into recession later this year or next year, yes, then we'd be saying, look, this isn't a temporary dip. This isn't a acute saying. This is a turn for the worse on the economy and profits. We're not getting out of the stock market totally, but we maybe want to cut that back from 65% to 60 or 55, depending upon the risk profile of the individual. So it'd be sort of more lighten up than get out, because you never know if you're going to be right, and we don't recommend all or nothing decisions.
Do you recommend, maybe this is personally or not on behalf of PNC, but do either of you believe in the stop loss orders? Do you practice that as a way to kind of keep track of where your stock is, and if it's starting to really go down, locking in some of the profit?
Yeah, PNC, because we active, not myself, but the individuals in our wealth management are actively managing this. So they might not do stop losses because they're watching it.
So they don't
day
have
by
to.
day, so they wouldn't have to. But
Right.
if you're an individual, you're going to go on vacation, you're going to run your business, you're not really able to watch the market that closely. It might be a good idea to do that, so that if your attention is elsewhere and your stock takes a dip, then you're sold out. And sometimes before you know it, and that's a way to have some downside protection.
Is the recession in Europe already built into everything that we're doing, or is there more to come to to drag down the U.S. economy, or is that an impossible question to answer?
No, it's a fair question to answer. We have tried to build into our forecast that there is a recession in Europe. There will be this year. It'll be worse in Southern Europe than in Northern Europe. It'll include the UK, even though the UK is not part of the European Monetary Union. And we figure that given our exports to Europe account for about 2% of the U.S. economy, that'll cut growth this year by about 0.25%. So our growth for the year is 2.5%. That's a little better than last year, where Europe not in recession, maybe be closer to 2 3/4. Now we're assuming that there'll be a recession in Europe. It'll last this year, and they'll begin to have some recovery next year, and there won't be a financial calamity. And I think given what the European Central Bank has done over the last 3 or 4 months, really took the idea of some sort of a, post-Bear Stearns when that, or Lehman Brothers, when that collapsed and the whole global market froze up 3.5 years ago. We think that's very unlikely to happen in Europe now. 6 months ago, that was a greater worry, so we've tried to factor in, to the best we can, a recession in Europe, but growth in Asia, in India, China, Latin America, North America, and Europe, though, is definitely the one area that looks weakest in the globe.
And Ric DeVore, as regional president of PNC in Southeast Michigan, you have to work these figures, statistics, problems, circumstances, situations into what you do when you have absolutely no input or control on the problem at all.
No, you're right, and we have a number of customers, as you know, that deal globally. I want to emphasize again, Europe is kind of a tale of north and south. What's going on in Germany is much different than, say, in Italy. I have some promise of Italy, though. It just seems like the current group in charge are doing the right things. Now, whether they have the courage and intestinal fortitude to stick that course, I don't know. But it does affect a lot of the automotive suppliers that we deal with that deal globally. But to Stu's earlier point, it's somewhat made up in some of these other countries, the BRIC countries, if you will, the Brazils, the Russia, India, China. And it seems to be right now, if I were just in Spain and Italy, I may be concerned. But if you're more globally, it seems like it's balanced itself out a little bit.
With my morning show, the Paul W. Smith Show, I traveled the world for the auto shows, and most recently to Beijing, China, for the Beijing Auto Show. What is the economic outlook for China and the other large economies around the globe outside of what we've been talking about, outside of Europe? I'll start with you, Stuart.
Yeah, we follow China very closely. We think growth in China this year will be around 8%. That's what the Chinese said they grew in the first quarter. They themselves, the Chinese, have set a goal of around 7.5%. And so we think it might do a little better than that. But last year they grew 9%, and a couple of years ago they grew 10 and 11%. So we do expect slower economic growth in China this year and next, but more in the order of around 8%. Now, I can tell you 8%, in the U.S. would be gangbusters. If China's growth were as low as 6%, that would be a recession. 6% for China is like 0 for the U.S.
Really?
or Japan or most developed economies. So, it's not like we're starting from 0. So it's definitely a much slower economy at 7 or 7.5 or 8%. That's kind of like our growing the 2.5% that we think we're going to do. But that's a far cry from a recession or so-called hard landing where the Chinese economies really crashes down. We think India will grow a little faster. Japan is still got many problems, although they're growing a bit from the devastation of the tsunami and the earthquake. Latin America, Brazil's doing very well, and Colombia, to bring that in, legal and illegal, and Chile and Peru. And as we say, we think Canada and Mexico are going to grow along with the U.S. So again, outside of Europe, and I didn't touch on Africa, but in Asia and Latin America and in North America, we think it's a picture of growth, but perhaps slower growth than some of those other parts of the world.
And many times I get asked, well, what do I care about China? And, for Southeast Michigan, if you just think it was not that long ago, there was one car for every 300 people in China. Today it's one car for every 30. And if you start looking at that kind of growth and what that does to our supplier sector, it's huge. And so, there is a reason why we track China. And I think sometimes that's lost on maybe the average person in Southeast Michigan, but it's huge for a lot of our companies.
Well, listen, General Motors sells more Buicks in China than they do in America.
Status symbol, right?
There are more English-speaking people in China than in America. It's a 1.3 billion people place, and that number's up from when I first started the sentence. But 300 million Americans that, let's pretend they all speak English. We know they don't. But all speaking English, 300 million. Out of the 1.3 billion, there are more than 300 million English-speaking people in China. So we can't ignore what they're doing. And as we know locally, Rick, Ford Motor Company just very clearly stated, we're going to double our efforts in China. Double them.
And you might say the exact same thing about India.
Right.
Which I guess is another story. Except we have time if you've got the story now. Will people who are going to China and have in the past for manufacturing have watched the cost of doing business in China rise. So now they're looking for other places. Is it Vietnam and India and where else?
Well, I was thinking as much from a demand point of view, and of course you can produce in the same country just like in China. But when you talked about a billion people, and many of them speaking English, you could say the same thing about India. There's a large number of people growing, and a large number of them speak English as well. And while they haven't shown the steady growth that China has over the last 20 years or so, there's a growing middle class in China that also is going to want to buy American cars, whether they're GM, Ford, or Chrysler. And so I think that is another area that we watch as a real potential.
You said, just so I can follow this, you said a steady middle class growing in China. Did you mean India?
In India.
Okay,
in China
so I know
India.
that there is in China. I wasn't aware there was in India.
Well, I mean, India still has a very large impoverished class, as China does, but India is similar to China in growing a middle class in the business sector off of the agrarian. But of course, poverty, as in China, is still very, very much a problem in India. But like you said, when you got a billion people, if half of them are growing,
wiggle room.
That's bigger than the U.S.
yeah, there's a lot of wiggle room there. And I remember when first going to China, how many bikes there were, and they were predominant. And now it's absolutely cars. And if it's only, I'm glad you have these figures, because I always wondered, it used to be one car for 300 people. Now it's one car for 30 people. And I don't know where they're going to put any more cars, because it's already unbelievable. Shanghai especially, the traffic is unbelievable. It makes Los Angeles, New York, it looks like that's nothing. They're like on country roads in New York and Los Angeles compared to what's happening in China. And what is the figure in the United States? If it's one car for 30 people in China, is it something like 38 cars for 30 people in America? Well, I mean, what is it really? I don't even know.
I actually don't know.
I don't know.
I do know the average age of cars here is 11 years old, but I don't know that number, but I bet you it's similar to what you're saying.
I mean, you see households with 3 people driving their 4 vehicles.
Right.
Well, in the good days, I get to do quick math on top of my head, which would only approximate it, but, the average age of a car is a little over 10 years old. In the last 10 years, we've probably the industry's probably averaged sales of around 14 million. That's 140 million. So it could be 2 to 1. It could be one car for every 2 people in this country. Maybe it's 1 to 3, but order of magnitude compared to 1 to 30.
Unbelievable.
It may be 1 to 3.
And I'm not suggesting it's going to get similar in China, but still, if you see those numbers, it's let's say it gets to be 1 in 20. It's a huge opportunity, given a population base that size, for our suppliers here and our automakers.
And with television and, more importantly, the Internet, we all want the same things. And as there is wealth and middle class growth, they want some of the things that, in fact, we now take for granted.
Yeah, probably the only other greater penetration per person is cell phones.
Yeah, that's right.
That's a good point.
That's a very good point. Last thoughts while we have you in town. Stu Hoffman here, Senior Vice President, Chief Economist, the PNC Financial Services Group. They just finished the PNC's first ever survey of small businesses in Michigan. Is there a way for all of us to get that information or that report?
Absolutely. It's on our website, and it's pnc.com/economic reports. One word, pnc.com/economic reports. That'll bring you to the the homepage of the My Economics Group, and it'll say right there, latest PNC Spring Small Business Survey. Click on it, and as I said, you only get you can get the U.S. results, you can get Michigan, but you also can get Indiana, you can get Chicago, New Jersey, Ohio, Pennsylvania, Florida, North Carolina, Atlanta, and I think that's about it. So it's the national and many of the regions that are in PNC, and as we said, Michigan for the first time, but on an ongoing basis.
Well, we're happy to hear that, that's for sure. And the final word from our co-host, the PNC Regional President, Ric DeVore.
Well, I think along those lines, Paul, in this survey, I'm very excited about what it may be if you forecast out in Michigan 6-9 months forward as the business taxes, take root, if you will. There's been a fundamental change here in terms of the taxes on businesses. My guess is, and I think I'm not way out on this, is that will result in even a better sentiment from our small businesses. So I think we have some good things to come here in that regard.
And that's a good way to end it. Stu, always nice to see you. Ric, always a pleasure being with you. And thanks for joining us on PNC Roundtable. I'll be talking to you on the radio Monday through Friday, 5:30 till 9 on WJR. Regards, Paul W. Smith.